Welcome to Nebula Trades, where we take the complexity of the markets and make it tangible, practical, and, most importantly, profitable. I'm Apollo, and if there's one thing I'm passionate about, it's turning dense market theory into actionable intel. Today, we're demystifying gamma, that subtle yet influential force that can help you forecast price action, gauge stability, and uncover prime trading opportunities. Just remember, while these insights can give you an edge, it's always up to you to do your own research before making any moves. Let's dive in. Gamma measures how much an option's delta changes as the underlying stock moves. It's essentially the acceleration of delta, revealing levels where price might stabilize or gain momentum. Think of gamma as a magnetic field for prices. Positive gamma is like a stable magnet, steadily pulling the price towards certain levels and keeping fluctuations calm. Negative gamma, however, is like a magnet gone haywire, causing price to ricochet with violent, volatile, and explosive swings. Before we dive deeper, let's ground our understanding in a visual example. On the screen, you'll see a gamma profile chart for Tesla. Each colored line represents gamma exposure at different expiration dates and strike prices. The vertical green line marks the current stock price. Above the zero line, you'll spot areas of positive gamma, and below it, negative gamma. Also note the label indicating the ratio of positive versus negative gamma exposure POSGX, 80%, NEGGX, minus 20%, and the current expiration peak of positive gamma and peak of negative gamma. This ratio gives you a quick read on whether the environment leans toward calm stability or heightened volatility. As we move forward, keep this chart in mind. We'll reference these peaks and valleys to understand where price may find support, encounter resistance, or break out toward new levels. In a positive gamma environment, market makers often bid the market, buying into dips and fostering a more bullish price action. Positive gamma smooths out price fluctuations, creating a calmer trading atmosphere. Areas of strong positive gamma frequently appear as peaks above the baseline on our chart, acting as price magnets. When approached from above, these peaks can provide support. When approached from below, they can serve as resistance. Under negative gamma, market makers buy into rallies and sell into declines. This intensifies price swings and creates volatility, like a wild pendulum swing. Negative gamma zones dip below the baseline. When price enters these zones, expect more aggressive moves. Imagine price as tiny metal filings scattered across a table. When gamma exposure builds, it's like bringing a strong magnet closer, pulling the price toward those hotspots. When gamma weakens, that magnetic hold loosens and price drifts away. As expiration nears, the magnet grows stronger, making the option strikes with the most gamma especially powerful in shaping where prices head next. PPG, peak positive gamma, the point on the chart where positive gamma exposure is highest. This often acts like a price ceiling or magnet, drawing price upward in stable conditions. P&G, peak negative gamma, the point where negative gamma exposure is greatest. Think of it as a volatility hotspot that can force sharp moves or repel price stability. Alright, let's dive into one of the most practical applications of gamma. Understanding price behavior when it's between peak negative gamma, P&G, and peak positive gamma, PPG. This range holds critical insights for defining your support, resistance, and trade opportunities. Scenario 1. PPG is greater than P&G. When PPG, the strike with the strongest positive gamma exposure, is greater than P&G, it means the environment is more stable and supportive of rallies. Here's how to trade it. In this setup, P&G will act as a support level, meaning price is more likely to bounce upward from that zone. This is a great opportunity for a long trade, with your target being PPG, as price tends to gravitate towards a stronger gamma zone. Scenario 2. P&G is greater than PPG. Now, when P&G, the strike with the strongest negative gamma exposure, is greater than PPG, it signals a more volatile, sell-the-rip environment. Here's how to approach this. In this scenario, PPG will act as a resistance level, meaning price is likely to stall or reverse downward at that strike. This creates an opportunity for a short trade, with your target being P&G, as price tends to move toward the dominant negative gamma zone. Scenario 3. P&G and PPG at the same strike. Finally, when P&G and PPG converge at the same strike, this level becomes a pivot point. This is where price action can flip direction based on where it breaks relative to that strike. If the price moves above the pivot, it's a signal for a long trade, targeting the next gamma spike higher. If the price moves below the pivot, it's a signal for a short trade, targeting the next gamma spike lower. As expiration approaches, gamma intensifies. When P&G and PPG converge at the same strike on expiration day, this heightened gamma often creates a gamma trap, pinning the price at that strike. Scenario 4. P&G above PPG. While this is less common, it can create conditions that introduce explosive upside volatility, resembling a short squeeze in some cases. Typically, negative gamma increases volatility in the direction of the prevailing momentum. In this case, if P&G dominates, the volatility doesn't just amplify price action, it does so to the upside. PPG creates a floor for the price, holding it up and enabling upward momentum to continue. If P&G is greater than PPG, or if P&G increases further, the price action becomes highly volatile to the upside. This occurs because market makers must aggressively hedge their short gamma positions as price moves higher. This hedging activity, market makers buying into the rising price, can trigger a feedback loop, creating sharp, violent moves upward. These moves often resemble a short squeeze as traders are caught off guard by the intensity of the rally. Thank you for joining us at Nebula Trades. This concludes our short video on gamma. For more details and insights on trading using gamma, Vanna, Delta, Charm, and other Greeks, please subscribe to the Nebula Trades Discord or newsletter. To find more information, visit our website www.nebulatrades.com and follow us on X at TradesNebula. Until next time, remember, trade the data and not the noise.